Good evening, gang. Yes, I'm here. Don't worry. I ain't gonna not press the live. And to answer your question, my friend, yes, I do miss you guys. You know, at the weekend, as much as I try my best to relax and disconnect from the charts, I'm like thinking, what's everyone thinking right now? Luckily, Bitcoin doesn't do much over the weekend, so that's kind of cool. But if any madness unfolds, like today, we have to jump online and have a little conversation. Good evening, gang. Hope everyone is doing well. So, buy the dip. Or do we wait for the bait? That's really the topic at hand tonight. In today's live stream, we were talking about a few metrics on Bitcoin in regards to the miners. And I think when they update that website, which we'll be looking at tomorrow morning in the New York Live, if you are new and you don't know, I go live every single day, 2 p.m. UK time, 9 a.m. Eastern Standard, to bring you that flavor. We're going to see what that chart is suggesting if the miners did decide to sell on this rally to the upside for Bitcoin, okay? So the idea is, do we buy this dip? Well, do we class it as a dip? Has the bait been delivered yet? Well, what I'm going to do tonight, guys, is I'm going to be doing this deep dive per se in helping us understanding the logic of the dip. We're going to take into consideration where we are right now in the stock market. Bonds are getting slapped. That's a problem. If bonds are getting slapped, that means investors ain't seeking low-risk investments. What does that mean? Well, it means they ain't putting their money in the most minimal risk. The only thing that is lowest risk possible, which is no risk at all, is putting your money into cash. Hence why the dollar dominance has taken a wild move to the upside today. And Bitcoin's reaction was somewhat delayed, yet it did manage to follow through and come down again. We're going to look into the importance of the options market and what that is suggesting to us in terms of traders' mentality of where they think Bitcoin's going to end up. This is very important. And the metric we're going to use is the put-call ratio. That's really going to help us understand where we are. And also what I'm going to do is I'm going to do a little bit of a process where what I like to look for with altcoins, I've done this before, but I'm going to take into consideration some other metrics and split it between a trader and an investor so that the trader knows what he's looking for and the investor kind of knows what he's looking for. Okay? So let's get with the flavor. Let's get the shades back on. Are these bad boys clean? Well, they're sort of clean, but anyways. I hope you're all doing well. I've got a new drink, by the way, jasmine tea. That bad boy. I've been drinking so much jasmine tea. It's unbelievable. Drink it after food, drink it before food, drink it during the process of thinking about having food. That's how bad it is. Haven't drunk hardly any coffee today. I had 1 cup today. So, and that was at like, what, 8:15 this morning? Not bad, not bad. So, let's get with the flavor, ladies and gentlemen. Here we go. So, good evening. Thank you very much. Yes, we've had a decent day today. We have had a very interesting day today in terms of the platinum members with a few setups. I'll just talk you through those setups today. So this was the setup that I gave this morning, and we spoke about Euro, Bitcoin, Ethereum, Solana. Now, Bitcoin, Ethereum, and Solana, they didn't really clear the ranges that I expected them to, but we saw movement in them, and that's what I'm going to be breaking down tonight to help you guys understand how to work out where an asset is likely to go. And I'm going to give you an example of the NASDAQ with regards to exo charts. So stick around if you want that flavor, ladies and gentlemen. All right? So today, we had the logic that Euro was going to take a bit of a tumble to the downside. I always project what price could do before it actually goes to my desired zone. This area here is the vector candle wick on the weekly time frame. So I'm paying attention already to an area of interest. Okay. We go into the Euro itself and we can see it's actually achieved that and continued its move all the way down. We wanted a price point of 1.07216 and we ended up getting 1.07228. So we missed it literally by point. I mean, let's just really look at the actual target itself. 1.028. Oh God, it was so small. Fractionally. See, I can't even draw it on here, man. This is absolutely wild. Where is it? There we go. We missed it by 1.4 pips. Not bad. You can't complain about that. Go back and have a look at what else we projected. Here we go with gold. Now, gold was quite interesting because we said in the article, listen to this guy, thinks he's a journalist. I said I'd be very careful with gold as they are already close to the range daily low. Now, just hear what I'm saying. Just listen to what I'm saying with this, because I'm giving you my logic of how I'm applying the hybrid system into a setup, okay? This is gold. Don't need to talk much about it. I would be careful with gold as they are already close to the range daily low. Range daily low is consistent with reversals, where I would be expecting a retrace back up. However, it will not be for long. The red vector block is an area that will help you understand if they're preparing to run shorts on the back of gold rising back up to go back down again. We go over to gold and we can see what they ended up doing. They initiated the perfect play. So that's where it was. We expected the reversal back up. Red vector candle region. This is when I'm drawing off these block zones, helping you guys understand what price can do at them. They are reactive points in the chart. Okay? We assume that there's going to be some selling activity here because that's where they previously sold from to trap retail. Okay? And look at how the same spot, I mean, you can't even ask for anything better than that. Look, red vector start right here. Go across, look at where they sold off from. And that's when they initiated the drop back down again to sweep the liquidity lower and take out our projected zone of the range daily low and some, and then reverse all the way back up into the same zone. I'd say today the star of the show for me was oil, because we expected oil to come down in two. And here is another example of anticipating where the vector candle will turn up. The idea of projections in the charts is to help you work out where are you going to see the most impressionable behavior in the charts. When I say impressionable behavior, it means when is the retail trader going to buy and sell? And when you kind of get a feel for the asset that you're trading and you kind of say, you know what, we've been dropping down for quite some time now. I'm expecting a little bit of a volatile move to happen. In this range right here, I projected that oil was going to achieve stopping volume zone. This is an area where the stopping volume candle would appear. Why? Because oil had already been dropping to the downside. And with the back of the Fed looking like they ain't going to be increasing the interest rates, decreasing the interest rates anytime soon, or should I say, the marketplace ain't hearing what they want to hear, investors tend to turn to commodities, okay? And that is where oil ended up making this move to the upside. So check this out. Look at oil. Came in and gave us the rejection of the stopping volume candle to move back up. I said in the actual writing itself, allow oil to attempt the lows where we can anticipate stopping volume candles to appear. It is in this range I would expect a sharp reversal to make the recovery back up towards the daily open. So from that point, you can see the daily open was right there at 72.75. We had the stopping volume candle, which is right there, ladies and gentlemen, 15-minute time frame. Look at how they stayed inside of this range, okay? The stopping volume candle came in, and this is where they initiated the reversal back up. The oil traders would have been preparing themselves because the red vector candle came in, but it didn't really gain much ground. Again, guys, take a picture of this. When you see red vector candles appearing at the lows of the chart or whatever asset is you're trading, this big pressure of marking price lower, but it doesn't go anywhere, and it's not taking out any significant zones, is a clue that they're getting ready to come back up. Just look for this red vector candle and another one, but wait for the stopping volume candle, because that's the lowest point in the range that they are likely to reverse back up to try and attack the vectors and make a run for it. Happy days, oil came and cleared out the zone and some more, and now we're stuck at the daily open where the market finished. Congratulations on those trades, okay? We did have a little bit of issues with Bitcoin. So Bitcoin today, I wanted Bitcoin. It was at 43,187 where we projected the price to start moving higher and wanted to see it work its way up towards this range of 43,629. And we didn't quite get towards that point. We only managed to clear up from 43,187 region right here. Where was it? Inside of this zone right here. And then they just climbed up. So they managed to give us a little bit of a flavorsome move of around $300-400 move to the upside. And they left some behind over here. So we kind of missed out on Bitcoin. But that's not a problem because we kind of compensate with Euro and the NASDAQ earlier on today. And the same with Ethereum and, of course, Solana, all right? But taking into consideration what we spoke about today with regards to the miners, this thing right here, I'll be very surprised if this line right here doesn't shoot up. And if it does shoot up, then we can justify it as a metric to understand that if Bitcoin is rising to the upside, all right, how likely is it that miners are waiting for it to rise to sell? Because if it does rise and the mining activity is slowing down in the sense that they're not actively looking to sell, or the ratio, or the miners position index isn't suggesting that they are looking to sell, then we can then say maybe this move to the upside in Bitcoin is valid, okay? So we're going to be paying close attention to this miners position index, okay? Now, going into Bitcoin's price action, what have we got going off here? So let's just look at it from the 1 hour time frame, okay? Now, let me just put something out there, ladies and gentlemen. Here is this zone that we marked off today in the live stream where we were talking about these zones. And I said to you that if the 5-minute time frame starts to show a red vector candle coming into play, then that would be of the assumption that we're going to start breaking lower. And you had 2 instances of the vectors coming in. Here is where you're getting conviction that the block right here is not sustaining itself as an area of support because it's in line with the market maker's objective of marking price higher to build his shorts at the highest possible point. What am I saying? What I'm saying is if Bitcoin was going to show strength inside of this zone, we would logically expect them to start showing support here, here, or even here. Because then that would mean that market maker has an objective of marking price up again from this point to effectively run shorts from the highest range possible so that he can then bring it down. Well, he didn't do that. What he did was he just flushed price down, and they did come back into the VWAP, which was the problem. But the good thing is Bitcoin hasn't actually broken down a significant area just yet. Here we have the red vector candles where Bitcoin hasn't done much, all right? Now, going into the daily time frame, Bitcoin is now back into the cloud. Now, for the holders, I would suggest you pay close attention to this range right here. The price range between 42,029 and the 42,824. Now, let's mark a bit more. Here we go. 42,949 and the 42,006, okay? Now, the reason why this is an important area is because Bitcoin is trading inside of the cloud. People are waiting for the 50 EMA to confirm itself. So that's what retail traders are doing. When I'm looking at this, I'm looking at the volatility of this range. And if Bitcoin sustains itself inside of this cloud zone right here, the logic says that if they can climb out of it, then we assume that this is an area of support, okay? If they continue to break below the 50 EMA and trade inside of the cloud down below in the lower band, there's a good chance that Bitcoin is going to roll over and continue down. Now, we can look at the chart and assume that, does Bitcoin have the capacity to go down? Well, yes, it does, because we do have an imbalance inside of this range right here, okay? That's that green vector candle region. So we got to pay close attention to this bad boy, all right? Because it is an area that there is an imbalance. Now, as much as I said in the description of this video that we have a free week in terms of news announcements, yes, we do. You can see the ISM PMI came in at 53.4. So that's kind of good news for the US, okay? Tuesday and Wednesday, we don't have any issues with news announcements. So only something catastrophic could actually cause the markets to go all over the place. In other words, the market is free to manipulate itself and trade nicely. We don't have no slow range movements because Powell's speaking, or we have no non-farm payrolls. We're just going to have nice plays. And usually what happens is you're going to start seeing price move towards a range daily high, reject it, come back down, range daily low, reject it, come back up, or pivot points, you name it. Usually days with no news is a day when the market can really have be fluid in its movements, okay? So that's something to take into consideration. Now, before I really dive into the idea of Bitcoin price action, okay, going into Asia per se, let me just introduce something to you right here. So, wow, what's this, Tino? Cool charts, bro. In front of you is the options markets per se, or data on the options of Bitcoin and Ethereum. Now, what I want to draw your attention to is the actual put-call ratio of Bitcoin, okay? Now, there's a logic, right? That if the put-call ratio is above 1, then we're looking for shorts to effectively see prices come to the downside because there's lots of puts being purchased, all right? So we're looking for shorts. At the same time, when the put-call ratio is below 0.5, we are of the idea that lots of longs are coming into play, which is effectively telling us that people are favoring higher prices. You may have heard me talk about this before, but this is very important. The reading right now on OKEx is 0.79. We go down, we look at other platforms. Global is 0.42, and Deribit, which is the largest platform for options, is 0.42. So the word looks like that Bitcoin should be moving up because the put-call ratio is favoring calls. There are more calls than there are puts, right? Okay, so this is what the problem is with that. If you've got lots of guys running puts, that means if the strike price is at 35,733 and you've got a put-call ratio reading below 0.5, then you're of the understanding that there are loads of guys in calls waiting for Bitcoin's price to effectively close above the strike, which is 35,733, and be in the money deals, okay? So that's where they are in profit, okay? Options, should I say, in the money options. Now, the problem is when you see the put-call ratio hovering at a specific zone for a period of time and you're not really seeing the market flourish, or if anything, you start seeing the opposite happening, what's really going on is when people are opening calls to favor higher prices, they're leaving their margins below, okay? Now, what usually happens is if you have a cluster of all these guys favoring higher prices, the market will come down and sweep that liquidity and then make the reversal, thus forcing those guys who had their calls out of the money, go to expiry, they've been liquidated per se, and then they're trying to rush now to get better options, but the implied volatility has gone so badly against them and they've missed it that they're forced to open shorts, or should I say more calls, at higher prices, thus giving them a really bad average of entry, and then they end up missing out on the move, and then the same thing happens again. The price comes back down again and makes them start itching, thinking, oh my God, I've kind of messed up on this play. So just keep an eye out, which leads me to the idea of, do you buy the dip or wait for the bait? So that leads me over to the market in the sense where our our offers and our bids come into play. Now, we haven't had any significant areas, or should I say, significant interest come in on the bids and the offers. That's why we've seen Bitcoin make a move up to only come back down again and pretty much be in the evens story. So there's nothing much happening inside of this range with Bitcoin, okay? Now, if we just go back into that and have a look at it, we zoom in and we say, all right, then what do we have close by? So, and I'm going to be getting into this when we're talking about altcoins for a trader and altcoins for an investor, okay? We look at this and we say, okay, what we got here? We've got 2.63 million on Bitcoin. Now, when I look at the actual big resting orders of Bitcoin, in the nearest value at 42,616, which is $200 away in principle, there's 61 Bitcoin, which equates to around 2.63 million. And those are offers. Quite frankly, it's tuppence. It's not much, okay? Price can move up aggressively to that point and come straight back down. It's not an impressionable amount of Bitcoin. As we go up, we can see at 43,050, we have 5 million. Now, when you go back and look at the bids, usually when there's an order of around 2.5 or 3 million Bitcoin at a specific price point, depending on what Bitcoin is doing, that's going to grab someone's attention to load up on Bitcoin and add to the initial amount. So what do I mean by that? Well, let's just go over here for a second. You can see in this order here, there was 2 million initially placed at the price point of 42,222. But what actually traded was 7.15 million. So what does that tell you? It tells you that someone initially placed an order at 2.08 and he was sat there like a wet fish waiting for Bitcoin to be filled, and he came in and so did other guys come in at the same time. So it grabbed interest. So we know that the 42,222 is a big area of interest for Bitcoin, which is why we're starting to see a few bids being opened inside of this area. So you've got a bid here at 1.08, and then you've got 1.02, and then you have 1. So even though there's not that many bids, it's an area of interest where historically people stepped in and transacted on Bitcoin. Now, you might not think 7 million is a lot at that price point, but we're talking at that price point. That price point led Bitcoin to come back up, retest it again, and then initiate the reversal. If anything, it actually encouraged more people to step in. Look at this. Someone loaded up 390 Bitcoin at that price point. Why? Because they would have understood that someone previously placed 7 million. Now, we don't know if that person had already placed 7 million and then finalized with another order here. What if he actually had about 25 or 22 million Bitcoin that he wanted to, 22 million in terms of dollars or value of Bitcoin that he wanted to get rid of, and he'd done it in 2 instances, okay? We don't know, but all we can do is just follow the narrative of where the bids are at their most. The same for the offers as well. Where are the offers at their most? So we can look at this point in the chart and say, okay, right now there's 5.02 million traded at that point. Someone came in and loaded off on Bitcoin and sold at the 42,898. We go back up and we see, okay, same thing again, the 42,998. So 10 million in 2 separate orders. So we know that this area right here on Bitcoin could be an area of interest to sell from. And if they don't aggressively sell from that point, we would then be of the impression that Bitcoin can actually surpass and clear the range and start tapping into the areas of interest where they can start selling at a higher price. But they're only going to do that once they are satisfied with the bids, which leads me into the next thing. Are we seeing the bait yet? I don't think we're seeing the bait yet. When I say bait, I'm talking about making people think that buying the dip right now is a good thing. And if they buy the dip now, then Bitcoin logically could continue to go down, shake out those players, and effectively reverse from that point. My logic being is this. If Bitcoin is going to induce, or the market maker induces leveraged traders to believe that prices are going to continue to go down or go up from this point, he's going to smack their liquidations and mark prices even lower, hit the bids that are coming in that are suggesting interest at these low points, and test the market's memory. Because over here, ladies and gentlemen, we had some flavor in Bitcoin. Okay, and you can see we got some big orders being stacked inside of this area at the 42,000. So 42,000 for me is not, in my opinion, is not a point in the chart where you should go crazy and buy the dip. It's not. It has to be below it for me to really say, okay, the bids are coming in to protect themselves. Because if you're buying $2, $3 million or $5 million worth of Bitcoin, then, and that's at 42,000, I'm sure if Bitcoin goes down to 38, you're going to be cool with it. If anything, you'd be thinking, okay, I'm going to load up a little bit more. All right. But we've got to pay attention to where the commitment is for the support of Bitcoin by the bids. Because if we don't have the bids, the market will move to a point where they will engage in value so aggressively that you are going to effectively witness the sharpest V-shaped play in Bitcoin. When you witness V-shaped plays, that is a mini flash crash in Bitcoin to garner the interest of the bids that have been sat resting in the market and getting filled to surprise. Okay? What do I mean by that? Quite frankly, if I've got an order down here, look, there's 17 million at 38,000. All right? 17 million, 378 Bitcoin at 38,000. Hypothetically, let's just make the assumption that Bitcoin just collapses, all right? We know that that's going to be a huge area of support. Not to forget, at the 38 zone, we had 29 million transacted on Bitcoin, all right? And that was 837 Bitcoin. Look at where they're transacting. Look at where the bids are coming in at the most aggressive, or the assumption of the most aggressive point in the chart. V-shapes, the point in the chart where the retail trader thinks it's going down, that's where the bids are loading up. That is the fundamentals of a V-shaped play. Again, what does the market maker want the retail trader to think? Right now, the retail trader, he's trying to make sense of direction. Oh my God, is Bitcoin going to go up? Is Bitcoin going to go down? So now that takes me to the idea of altcoins with regards to trader or investor. What are we looking for? Okay, so check this out. Token Metrics suggests, or what it does is it splits these altcoins, all right? Now, what I've done is I've just set it so that it shows me traders and investors, all right? What would be more appealing to an investor? What would be more appealing to a trader? Well, what is a trader looking for? Well, the lower the liquidity in the altcoin itself, the higher chance that you're going to expose yourself to volatile moves. At the same time, if you do have an altcoin that does have volume, like for example, Matic. Matic does move very, very well. Solana moves very, very well, okay? And what you can guarantee with Matic, with a market cap of roughly around, I think it was about 7 billion, average daily volume, 7 billion, was it? Let me just go into that. Was Matic 7 billion? I think it was. Where are you? No, I read it earlier on. Where are we? There you go, 7 billion. Okay, so 7 billion for this altcoin itself. Average volume, 218 million. Happy days. Not bad, all right? So you've got volume backing you. So as a trader, you only really want to focus on altcoins. Like in my opinion, Solana, well, Solana's kind of tricky at times because you'll have Ethereum and Bitcoin up and then Solana's down. Now, with that being said, Solana could be going into some more flavor soon because they've already had 60,000 pre-orders of the crypto phone. Now, just because they've had 60,000 pre-orders, where it's rollout in 2025, that's great, but we would like that now kind of thing. Okay, so we can look into the future and say, yeah, Solana's a good little shout for the investor because they're now creating a product. You're not just buying the coin, you can actually buy the phone, okay? Now, as I said, investor or holder. Now, Matic is a perfect example for the trader to trade it, and it's good for the holder or the investor to get involved in it, okay? Because it does move very, very well. You don't really have no surprise movements unless there's news announcements, but collectively, in my opinion, Matic moves relatively well in the crypto space. It holds zones really well, and it just trades nicely and has its own ecosystem, what have you, Polygon. It just works. It's a nice asset, in my opinion. It does really well. Do I hold it? Not at all. But I look at it from the way it trades and its market cap, and I think, okay, I'm cool with this. If we want to dive deeper into it, then we go into the idea of what's going on with the developers. Is there anything happening with the developers? And we look, I'm not really seeing anything new for developers coming into play with Matic, so we're kind of cool. I mean, we're seeing that new devs are coming into Cosmos, and we've got Ethereum with another 25 new devs. Avalanche is still up there with more devs coming into play. And we've had Osmosis with 18 new developers coming in. And we've had Polkadot right here with -2 developers leaving. And Cardano's had 8 developers leave as well. So, you know, does that change anything? Well, we don't know why those guys are leaving. They could be retiring. They could be moving into Avalanche. We just don't know. It's just a metric of who's leaving certain coins and who's moving to other coins, all right? So it's one way of trying to find out whether you should trade the asset or not. Another way of finding out is looking at its market cap, stroke the volume. Look at this. So you've got this aerodrome. I don't like trading altcoins that are way like a binary, okay? So any coins less than a cent, I don't really want to pay attention to. Why? It's just preference, you know? I just find that, I mean, look at this. You got Flare. Flare associated to the airdrop with XRP. There's precedence with Flare. All right, it's taken a bit of a smack, but not too bad. It's kind of bullish, relatively decent 24-hour volume, market cap of nearly $1 billion. Happy days. From an investor's point of view, yeah, I'm going to look to hold that bad boy only because of utility that it can provide later on in the bull market or whatever marketplace you decide to buy your coins from or whatever you're waiting for in crypto, okay? Because even though we might have, okay, so let's assume that we're in a bull market right now. Hypothetically, we're in a bull market. You might hold a coin that doesn't even see the benefit of it. And that happens. Not every single coin will move up as much as we would want it to, okay? We've got here we go. We've got a chat activity right now. What's good? Spoody man, what's good, man? London's falling. Bought at the money put on SPY a week or two ago for 488 strike with a December 24 expiration. Break even at 466. Reasonable trade or kind donation to Wall Street. Gap on the daily at 445. So you bought a put on SPY. All right, then. So in the perspective of, and this is going to answer the question to the person that wants to get involved in altcoins or get into Bitcoin from a trader's perspective or from an investor's perspective, okay? We know now that Wall Street has its precedence over cryptocurrency. It's there. I'm sorry. Whether you like to admit it or not, Wall Street is where it's at. We need Wall Street to start getting some more market cap put up in cryptocurrency. Unfortunately, the new generation of guys stepping into crypto are still too young probably, or too old to even get involved in it. So what's going on now is you've got the same money in crypto, and that's what they said. They said that we're going to effectively have recycled investors. So they're going to sell one project or one altcoin and put it into another and make it look like that altcoin is getting the interest when it's on the back of another going down. In other words, one man's fun is another's hell. So you've got that problem. Until we start seeing new money coming into crypto, we're not going to see it unless Bitcoin surpasses the $3 trillion mark. Is that possible? Well, now it's only possible with Wall Street. They're going to have to get a bit busy with the ETF. We're going to have to wait for investors to really start coming into play and start picking up the Bitcoin ETF. The only way Wall Street's going to start coming into the ETF is when they start resolving the matter that we've got right here. Where are we at? Bonds. Simple. If you're an investor in the altcoin market, now some of you might not think that what I'm saying sits right, but let's jump back to cryptocurrency pre-bull run of Bitcoin 2021, right? There was not really that impression on the actual stock market. They were talking about correlations, but it wasn't really like matched, okay? It was only when the bull run started and it ended, when all the markets started to come down, we started to see the same thing happening. Bitcoin's going down, all the assets were going down. Was it because people were selling Bitcoin? Well, they were sort of buying it, but right now, we've got more of a correlation in the markets with crypto and the conventional markets of Wall Street. So we have to understand the relationship between the bonds and the yields, because it's going to come into fruition. Remember, these investors that want to buy the ETF of Bitcoin are going to treat it like a Wall Street asset. It's still an ETF. Yes, it's a money market asset. And usually when the economy starts to go to pants, they like to put their monies into money markets. Remember when we had this problem about banks were trying to stop people from withdrawing their monies, or, they were encouraging people to deposit money into banks? Well, they weren't doing that because they were planting it into money markets. ETFs were going sky high when there was all this hype before about the financial collapse with regards to the banks becoming illiquid per se. Crypto Life, for what's good? I got a vest that looks similar. I will wear it tomorrow. You're a gentleman and a scholar. May God bless you. Mad love to you, bro. Yeah, you don't know, bro. I actually stole this from you, but your team didn't tell you that. Yes, and I'll return it back, my friend. Mad love to you, man. Mad love to you, my bro. But yeah, so what I'm trying to say to you all is, for a person that wants to invest in crypto as an investor, or a person that wants to trade crypto, whether it's altcoins or Bitcoin, he has to follow what's going on in the bigger picture of the marketplace. You're going to look at the ETF and say it's sold off today. What does that mean? They could be buying more. They could be buying more Bitcoin. Well, that makes sense because Bitcoin's price has dropped. So logically, you assume that they're going to want to buy Bitcoin as it's dropping lower to then convert it into the ETF and put it into the trust. Happy days. We've got a couple of gaps down here, so we could project the idea that the ETF's going to come lower. That means Bitcoin's going to go lower, because that means they're going to be encouraged to buy Bitcoin as it drops. Remember the story of the bids, okay? But like I said, the story of the bonds is going to help you determine whether or not you should start investing in altcoins. Now, some of you might actually start looking at these sort of things right here. Are we in altcoin season? Are we in Bitcoin season? Well, if Bitcoin season is here, then Bitcoin should principally be moving up. But if Bitcoin is following Wall Street, this chart right here ain't going to be serving us if the impression of Wall Street is going to be thriving in crypto. Again, we're a bit hypocritical. We're decentralized finance, yeah, people's money and what have you, but Wall Street, can we borrow your money just to get a little bit of market cap, because I'm planning on selling my Bitcoin when it hits a point. I'm planning on selling my Shiba when it hits a point. I'm planning on selling my Matic, planning on selling my Solana when it hits a price point that I'm happy to say I got wife-changing money. That's the harsh reality of things, you know? I don't care what anybody says. You're buying these coins to sell them at a later point, because you're in it for the money. Or if you're genuinely in it for cryptocurrency, then you need to start behaving like you are about cryptocurrency. It's like someone that is an environmentalist that will stand up and say, I am against nuclear energy, but will still go back to their home and switch on their light from their energy provider who provides nuclear energy. Doesn't make sense, you know? Stop oil now protesters drive cars. It doesn't make sense. Doesn't make sense, okay? So again, the bonds. Now, when we understand the relationship of the bonds and the yields, that's going to help us understand whether we should either be putting our money into altcoins or into Bitcoin if Wall Street is holding true right now. Now, look, I can say to you, when it comes to altcoins, go and look at the developers, go and look at how active they are, okay? Go and look at the project itself, go and do some research in the white paper. That's fine. Those are the things that are going to make you buy it, but you want to know what's going to make the masses buy it. And if the masses are already manipulated in such a way where everyone's waiting for Wall Street or cryptocurrency is waiting for cryptocurrency to start showing a commitment and buying Bitcoin, or in other words, selling their Solana to buy Bitcoin or selling their XRP to buy their Ethereum, again, recycled crypto, it's not going to make sense, is it? How do you make sense of that? So the sooner Wall Street has an impression on crypto, the easier it's going to be for us to understand if we should get involved in altcoins or buy Bitcoin only. Now, of course, you guys have got the Bitcoin dominance chart. And as I said, you can use the Bitcoin dominance to effectively trade altcoins on a day-to-day basis. If Bitcoin dominance goes down, altcoins in principle should be moving up because they're favoring more altcoins. Are they selling their altcoins to go into Bitcoin, or are they doing the vice versa? These are cool metrics. But again, if we're relying on Wall Street, we have to pay attention to the 2-year yield. If the yield is going up, that only means that the stock market is going to be feeling the pain of higher yields. Why? Because it's going to cost them more money to operate their business if interest rates are high. If investors aren't putting their money into the bonds and the dollar dominance is moving up, because that only means what? They ain't even favoring low risk. They want cash as the safety. You've got yourself a problem, okay? Just look at what happened today on the NASDAQ and the S&P. You can tell what kind of flavor we've got in the marketplace already. Where are we at with NASDAQ? Here we go. Now, look, this is treacherous behavior. Okay, and I'm going to explain something to you all about exocharts as a little setup that you can pay attention to, okay? Earlier on today, I shared the trade setup and encouraged the guys to wait for the first clear deviation away from the VWAP, okay? And this is for these guys because I'm going to explain it now. NASDAQ managed during the open of 3 p.m. once the news came out showing that the manufacturing sector was doing all good, they started to make a move to the downside, and the VWAP right here, you can see price was trading away from it. Originally, there was this sort of rotation around the VWAP in the previous session, which meant the UK session, European market. And then we had the US open, and then we had a little bit of rotation right here for it to start trending lower and moving away. I wait for these plays right here, okay? There has to be a clear deviation away from the VWAP because I can guarantee to you NASDAQ is always going to be coming back to the VWAP. Here is the clue. You see this imbalance here because you're probably looking at it at this point in time and thinking NASDAQ's going to come up to the VWAP. It has to, right? But you see this imbalance. This imbalance is a problem for me in the NASDAQ because NASDAQ always likes to come back to imbalances if they are in the direction of the imbalance. So in other words, if there's no clear imbalances above, okay, that are left to be taken, the nearest one is going to be the one that they're likely to take. Now, the delta came in at this point. It did start to show around 8%, 11% on this move to the upside. It was a fast move, but then they started to trickle. And at the top side right here, we can see that there were buyers that were trapped in this zone. So they didn't really gain that much ground, okay? So the logic was that if you were waited for this point right here, they would have established the daily low and traded towards the VWAP zone right here. This is where you pay attention. If there are no imbalances on the reversal of the lows, which you see this candle forming right here, there is a good chance that this is the point they're going to make the reversal back into the VWAP. They do it like clockwork every day. What you're looking for is to make sure there are no imbalances in these areas. And if they are, wait till they are recovered. Okay? And they would usually try and swipe towards those zones. And if they leave them unrecovered, but price does come back into that point and not take it, and it closes higher, that's a strong intention that the guys inside of this area want to start hitting the offers and start lifting price up back towards the VWAP, okay? Don't want to go too deeply into it, but I wanted to explain that because a couple of guys were asking the question about how to navigate the idea of what price is going to do at the VWAP or not. You've got to try and determine where you are in terms of rotation. It's the same for Bitcoin. Whatever asset you put, it's the same all over the place, okay? So just take that into consideration. You have to know where you are in terms of the VWAP. If the VWAP is in a rotationary mood, which is like this, rotation, or is it in a trend, which means that if the VWAP is like this, pointing downwards, like that, price is doing this. Moving away, trending, away from the VWAP, okay? Let the first 30 minutes to an hour of the marketplace establish that for you. Pay attention to the previous session VWAP, and you'll get an insight into how they're likely to play the rest of the day. Capiche? So, again, bonds. If you're paying attention to the bonds market, if investors are putting their money into dollar, then you can assume that if those players who are actively involved in Wall Street and crypto, they're unlikely going to be buying altcoins, okay? From an investor's point of view. Now, wait there. That doesn't mean that they're not. It's just adding a metric to your decision-making if you are an investor. If the bigger picture is saying that the dollar is going up against assets paired against it, that means they're not favoring risk. Dollar is the denominating asset, all right? Euro, taking a shoe bag to the downside. Gold, drop. Gold's the commodity, man. It's down, okay? Bitcoin, eventually down. So when you want to know when to buy an altcoin, okay, if you get the anomaly and say, oh, wow, I'm going to start paying attention to, all right, let's have a look here. You've got Coty. That bad boy is up 10x right there. Okay, well, actually, let's just go over to this here and see what we've got here. So you've got CVX, which is up 492%. Well, the tweet volume gainers, what have you. Let's just go by price. All right, here we go. SPA. This one we spoke about earlier on today, guys, right? SPA USDT. Look at that. Sperax. It's continued to move up. So there's something motivating this asset to continue to move up. This is a pump and dump, all right? It's not to discredit the asset. It's just the way the asset is operating. This is what altcoins do. When you have the anomaly of one asset going against all odds against the bigger market, there is a good chance that it's going to catch up with the rest of the marketplace, okay? So from a trader's perspective, he's looking at this thinking he's going to be running shorts. From an investor's point of view, he's probably going to park this one and think, do I want to get involved in an asset like this, where it gets mentioned a couple of times on Twitter and it shoots up? Do I want that volatility as an investor? Do I want that for my portfolio? Well, then he's going to start paying attention to more assets that are effectively tied to Bitcoin, all right, or have similar volume to Bitcoin so that he's not absorbing such wild price fluctuations. I mean, saying that, Ethereum moves quite aggressively, so we can't deny that bad boy. It moves crazy. But as an investor, when you're looking for the project on whether it's going to withstand itself or is it going to continue, dive into the metrics of the company. Park the idea of developers for a split second, all right? These companies are cryptocurrency, right? So that means they're involved in tech. How weighted are they in debt? How much money does it cost them to actually start the business? Forget the developers. That's the easy stuff. You got developers that are showing activity in the coin. Okay, cool. That means the company's got money to service it. Okay? But if the company's got money to service it, where are they getting that money from? Do they provide a subscription? Of course, they're selling the coins and what have you. You're staking, you're earning rewards and what have you. But it pays to try and dive into the actual company. How much debt do they have? If you've got a company that's riding on a lot of debt and you've got interest rates at 5.5% with the prospect of them not actually going down sharp enough, then that company's going to come into some troubles if it's not got its books right. So you really think that devs is the last of the problems, because if the money's not there to pay the devs ain't going to do their job. Again, try and see all these cryptocurrency coins as stocks. Approach them as the way an investor in stocks would, okay? Because they're still companies. People are still operating them, all right? I'm talking about, Relatively decent altcoins. I'm not talking about these altcoins, ladies and gentlemen. So, look, I'm not talking about these bad boys. Here we go. Now, what was that? There's probably a purple. Oh, look at Pandora. Look at that bad boy. This is new. What on earth is this? Pandora. When did that get listed? Come on. Why is this taking so long? Forgive me, ladies and gentlemen. Wow, that's taking a long time. Come on. Oh, that was all I had to do. When did this coin come out? Wow, where are the markets? Oh, okay. This coin can't be, this coin isn't old, is it? When did this coin come out? But what I'm trying to say to you guys is like, look at this. Casino Inu. All right, it's got a nice volume there. All right, find out what the company's doing. All right, where's it set up? All right, how many people are involved in the company? How many directors? Does it have a board of directors? How many people have invested in it? Is there any venture capitalists involved? Angel investors? Are they actually putting money behind it to try and support it? As an investor, you're going to do your due diligence. As a trader, you're going to try to exploit that. So you're going to be paying attention to this casino, whatever it's called, okay? And you're going to say, all right, then cool. Can I exploit this? Where's it listed in terms of markets? All right, it's not on Binance. It's not on crypto.com. I can't trade it on Bybit. All right, cool. I'll wait for this bad boy to get listed and I'm going to be exploiting it like no tomorrow. Why? Because it's a cheap coin. People are going to be buying it and selling it and trading it for leverage and what have you. That's how a trader should be seeing it. Any company that's showing signs of a developer leaving, that's what the trader trades, okay? The investor trades the stability of the company. He involves himself in the stability of the cryptocurrency that's developing the coin or, you know, the brains behind it, all right? Developers is like paying attention to the operative worker, okay, who's cleaning downstairs in the company and you're ignoring what the fat cat upstairs is doing. Okay? Pay attention to the fat cat because that's going to guide you into understanding which altcoin you should really be getting involved in. All right, XRP, we know what's going on with XRP. Big fat company, happy days. Ethereum, big boy. Okay? Bitcoin to itself, you know, no one runs Bitcoin. Happy days. But in the ecosystem of the Ethereum blockchain, there are companies behind all of these altcoins. And if you want to get involved in them, start at the top. Forget the metrics of the coin. Start from the top if you can find out. Okay? And then work your way down and then say, yeah, this coin has a terrible market cap, doesn't have that much of a supply, not really listed anywhere, but I'm liking how the CEO's operating. He's got good credibility in the past with X, Y, and Z company. He actually sold his shares to go over to another company, but was recently involved in a company that's listed on the stock market. No one's doing that. Everyone's reading white papers, working out what the coin's going to do and the roadmap of the company. Okay, Q1, Q2, Q3, Q4, we expect to be here. I want to know what your flavor is now and how you sustain yourself now till next week or the next time they cut the interest rates. How well sustained are you as a company? What's your cash flow? Can you provide that information? Can you find it? That's the difference between an investor in altcoins and a trader in altcoins. He's going to trade the fluctuations of the volume in the market cap or the candlesticks. That's what a trader's going to look for. If he hears about a developer saying, yo, I'm going to be leaving this bad boy and he's tweeted it, he's going to quickly run to the charts to try and short that bad boy, okay? Depending on the developer itself. Do we get what I'm trying to do here, guys? Everyone talks the same thing when it comes to altcoins, all right? Yeah, look for your developers, but find out what the company is. If there is a company behind the altcoin, if there isn't a company behind the altcoin, it's a tradable asset. Okay. If there is people behind it, investors, dive into those guys. Then you'll know where that company's going, in my opinion. Tino, here we go. Sorry. Tino, can you look at Kota USDT? Here we go. All right, then. So here we go. Nice flavoursome move up with Coty. Seen a sharp flavoursome move high. Come back into the vector candle region. Okay, do I know much about Coty? No. Investor or trader? What do you think's going on here? Who's involved in this? The trader's involved in this. The investor shouldn't be looking at this until it comes all the way back down to this zone. Because the investor's missed out on the opportunity to take a profit on this bad boy. Unless the investor's already in this asset and he's been building his positions here, the idea is that the investor sells up here, the trader shorts it. Or the trader buys it from here. What I'm saying, it's a trader is going to react to what he sees. An investor is going to make a decision on the reaction of others. That could be good news. That just could be the market running for stops. He goes and dives into understanding why this has happened. Nothing significant happens for Coty, whether it's an upgrade or something, whatever it is. The investor's going to make a decision off that and say, you know what? That's the upgrade, first layer, whatever it is. Okay, it seems like it's a success. Happy days. I'm going to wait probably a day, wait for this bad boy to come all the way back down before I decide to load up another 1,000. That's what the investor's going to do. The retail trader, he's going to be looking at it and saying, I'm going to short the hell out of this bad boy. Yeah, man. Back into vectors, back into range daily lows. And then he will walk away from this asset like it didn't exist. That's the brutality of it. Here we go. Tino, MAV to go down, daily open to tonight, likely. Okay. I need to preserve my voice. MAV to go down to the daily open, likely. Okay, so the daily open currently sits at the 0.6803 mark itself. Okay. So the idea is you're expecting it to go down towards that point at some stage later on. All right. So in the next 5 minutes, the futures markets will reopen. So we would logically assume that it's going to try and do that, but it seems to be taking its time in doing so. All right. You can see right here. All right. Look, we're at the 800 EMA in the 5-minute time frame. Violet vector candles are coming into play here. So that tells me that it might take a little while to come back down, and it may actually find support at the psychological low. If you are in a short, let's assume you're in the short above the point right here at 73, I'd be considering locking profits at the range of 72.3. And then, of course, if it does come back up into this zone right here, you would assume you're looking for more shorts to try and see price roll back down again. Because you've got to say to yourself, if they haven't made it to the daily open since they've been marking prices all the way down, and they haven't done so already, and they haven't broken the 800 just yet, you would be waiting for more confirmation that they're going to do that. Because look, the psychological high was the last point that they aggressively moved from. You are effectively waiting to see if this candlestick right here is going to prove the precedence that they're going to try and mark up again from that point. The violet vector's giving me the clue that the selling is starting to slow down. So just be careful with this zone, okay? Right, people want my coin ank settings. Right, wait there. Here we go. And then I'm going to let you guys be. Where is it? Here are my coin ank settings. Where is that bloody thing? Right, there's nothing special about it. Look, over here, I've got the footprint. Don't even need it. It's not even on, okay? Liquidity heat map. Click that. Yes, that's the thing there. Ask colors to the right, bid colors to the right. Done, okay? That's the setting, okay? Quickly going to the order book profile. Don't even have it on, but it's basically this bad boy here. Don't even need it. Get rid of that. Cool. Large order. Go to that. Settings up there. Binance, Binance, Binance. Nothing, no interest in OKEX. It's all the way to the right over there with 10 million plus. Bitcoin perpetual, 1 to 2 million. We can actually increase that up a little bit more. Actually, we'll go for the full whack. I'm not interested in Bitcoin delivery. ETH perpetual, we can go over to there. We'll change that. We'll go to ETH spot as well. We'll change that. Try and get as much as we can and then leave it at that. So just max out those on the altcoins and Bitcoin. And there you go. You have exactly the same thing. Okay? Nothing special. These lines here are special lines that I've drawn. Look, these are lines that I've drawn. Nothing super. All right? And I don't know how I've got this. Apparently it's a paid thing. I don't know. It just works for free for me. Never paid into it. Okay? Cool. Ladies and gentlemen, I hope I've helped you out tonight with a perspective of altcoins and Bitcoin. Be sure to like and subscribe for tomorrow's flavor. We've got a free day in the market, so it's going to be good for some trading opportunities, and I'll be checking in with you all tomorrow. All right? Mad love and respect, guys. Take care of yourselves. Peace.